10-year note yields were modestly lower today as the uncertainty of trade talks continues to really dictate market trade. It didn't really have an adverse effect on equity markets, which were mixed. You saw some higher, some lower, but ultimately we hovered near unchanged in the U.S. But we did see Treasury yields push lower, actually touching south of 180 for the first time in a week, and looking like things are going to continue to push back to that 175 midpoint of the 165 to 185 range. So back into that comfort zone, and it looks like right now the data, the Fed, and all that other stuff is going to play second fiddle to getting some kind of trade deal done. And we're not expecting a trade deal before Thanksgiving. That is expected to come maybe in the first week, maybe the first week and a half of December. So we still have plenty of time. But again, when you start to see read through the tea leaves, you're seeing that there is no certainty, and that is causing the market a little bit of angst here. We saw gold prices rise, we saw stocks trade steady, and we saw Treasury yields go down. So combined, it looks like there is a bit of a concern. Market volatility, yeah, it was a little bit higher today. Surprisingly, even though we're back into that old comfort range, that old trading range that we got so, used to over the last several weeks and months, I think at this point right now, anything that has to do with China is going to bring the market bring the pulse up of the market slightly. We didn't see volatility spike today, but we did see a bit of an uptick off those recent lows, and that to me suggests that there is maybe a little bit of buying, insurance buying, call it whatever you want, that would give the market a little bit of reason to pause here and not be so maybe overzealous and thinking it's a done deal, like maybe we saw last week when we saw all that exiting and all that selling in treasuries. And lastly ahead, there are some really key events coming up in December that will kind of mark sort of the rest of the year. We've got the December employment report during the first week. We also have a NATO meeting. We have an OPEC meeting. We also get the DECE FOMC followed by an ECB meeting and a Bank of England meeting the following week. But really the big one is the UK elections coming on the heels of the December FOMC. So right now, a lot of uncertainty looming in the market, which is going to see treasuries find more favor. Things like gold are going to do better, and equities might trade sideways for a while, something we're really not used to. We like to see equities go up and make all those new highs, but ultimately we do need a bit of a pause here until we get through some of those events. And at this point right now, a slow and steady trade higher in treasury prices and a slow and steady move lower in yields looks to be the case as we head into Thanksgiving week, as we push forward into December and get through some of these key events. So right now, uncertainty continues to loom over the treasury market, one of the key reasons we saw yields slightly lower today.